Hey everyone, Assalamu alaikum. So now we'll be starting with a past paper solution, and the year that we'll be doing is October-November 20, paper 22. So this paper is of 100 marks and there are 5 questions in this paper, each of 20 marks, and we'll be covering each of these questions individually. So let's get started with the first question. The question says, Dave owns a business selling furniture. The following transactions took place during August 2020. So we are given with some transactions. We know that how many transactions are there? There are 4 transactions. We know the dates of transaction, the details and the values. So let's read these one by one. The first transaction is occurring on August 9, and what is he doing? He is selling goods on credit to Petra. So this means that Petra is what? Petra is the customer of Dave, amounting to $675, right? Then the second transaction is happening on 14th of August. Petra returned damaged goods to Dave amounting to $120. Okay, so she is now returning some goods. Then on 23rd of August, third transaction, Dave is banking some cash sales amounting to $412. So bank debit, cash credit, right? Then on 29th of August, the last transaction, Petra settled her outstanding balance at 1st of August by credit transfer after taking a cash discount of 5%, right? So Petra is making a payment. She is settling her account balance, which was on 1st of August, right? So do we know her outstanding balance on 1st of August? Not yet, right? But then the question also tells us that on 1st of August 2020, the balance on credit customer Petra's sales ledger account was 940 debit. So here we are told with the balance brought down, and this is the balance which Petra is settling on 29th of August after a cash discount of 5%, right? So we'll see how do we record these transactions. Now let's read the first requirement. Part A says, complete the table to name each business document and the book of prime entry for the following transactions in Dave's accounting records. Right. So we have to tell that what business document will Dave be issuing to record each of these transactions and in which book of original entry as well. But not for all 4 transactions, no. Rather only for transaction number 2, 3 and 4. So please don't make this mistake that you start writing the business document book of original entry from transaction number 1 and you miss out on transaction number 4. No, you have to start from transaction number 2, 3 and then 4. So however, even if you were asked to mention the business document and the book of original entry for transaction number 1, so that would be, then what is happening on August 9 in the first transaction? Dave is selling goods on credit to Petra. So in order to record this transaction, a sale on credit, Dave would be recording this in which business document? In his sales invoice, right? To document a credit sale, a sales invoice would be made by Dave and this will be issued to Petra. And therefore, in which book of original entry will this transaction be recorded? In the sales day book, right? All credit sales are recorded in sales day book. If they are on cash or on check, then they are not recorded in sales day book but rather in the cash book, right? But however, you are not asked to record the first transaction. So let's move to the transaction number 2, which is happening on August 14. Petra returned damaged goods to Dave. Okay, so this is what for Dave? This is returns inwards for Dave and returns outwards for Petra. So return inwards means the goods are coming back to the business. So first of all, in which book of original entry should Dave record this transaction? In a returns day book, right? Now returns inwards or outwards? Returns inwards, of course, because the sales are now being returned to him. So returns inwards day book. Right. Now, which business document will he be issuing to Petra for returns inwards? A debit note or a credit note? A credit note, right? Always remember that whenever there are sales returns, that the goods are being returned to the seller, he will always issue a credit note. Whenever the customer wants to return goods, right, he will issue a debit note to the supplier telling him or her that I have some issues with the goods or with the transaction or any other dispute and I want you to settle it. So in response, if the supplier accepts that debit note, he will be issuing a credit note, right? So therefore, Dave will be issuing a credit note for these returns inwards by Petra. So let's move to the third transaction happening on August 23rd. It says banked cash sales amounting to $412. So there were some cash sales and now Dave wants to put this cash in his bank account. So what document should he be using to record the putting of cash in his bank account? There is a document called paying in slip. This is like a form. This is given by the bank to the person, to the account holder who wants to deposit cash or sometimes even check into his or her bank account, right? So you have to fill this form and you have to write some of your account details, the amount that you want to deposit or the check number, the check that you want to deposit, and then you can deposit your cash or your check in your bank account. So whenever you want to deposit cash, you will go to the bank and they will give you a paying in slip. A copy is given to you for future reference, of course, and the original one is kept by the business. So in this way you will document your cash deposit in your bank account, right? So the document will be paying in slip. So of course, since it involves bank and cash, which book of prime entry will be used to record this transaction? Cash book, right? All transactions relating to cash, bank, the cash sale, the payment of expenses, payment to suppliers, payment by the customers, if through cash or bank, will be recorded in the cash book, right? Now let's move to the last transaction, transaction number 4. It says on August 29, Petra settled her outstanding balance at 1st of August by credit transfer after taking a cash discount of 5%. Now what do we mean by credit transfer over here? Credit transfer means when an amount is directly paid into your bank account by a third party. So this means that in this case Petra hasn't come to Dave telling him that I want to deposit this check in your bank account, so please do this for me. No, she has directly made a payment in his bank account. And when will Dave come to know about this payment? He will come to know when he will receive a statement from his bank account that you got this payment directly in your bank on this specific date, right? So this means that if there is a payment through credit transfer that is directly received in your bank account, which business document will show this payment? There is a document called bank statement, right? Bank statement is received by the business or by the individual from the bank, and it shows all the transactions through the bank in a particular month. So yes, if there are credit transfers during a month, it will show that as well. And after tallying transactions from the bank statement, the business update its cash book. So yes, since this amount is being received in bank, it will be updated in the business cash book, right? So the book of entry, prime entry, which will show this transaction is cash book, right? So this is how you will get your 6 marks. Now let's move to part B. Part B says prepare the account of Petra for August 2020 as it would appear in Dave's sales ledger. So from Dave's perspective, you have to prepare Petra's account, and you are also told to balance the account and bring down the balance on 1st of September 2020. Right, so we have the format over here. We are given with the year as well, 2020. You just have to make the T account. Okay, so we are told with the transactions that took place between Petra and Dave during August 2020. So should I directly start with this credit sales on August 9 amounting to $675? No. After these transactions, I was also told the opening balance in Petra's account, and that was 940 debit. So please don't make this mistake that you forget to enter the opening balance. So first of all, we will write the opening balance on August 1st, and that is the balance brought down. Petra is the customer of Dave, so customers usually have debit balances, and we are also told that this is a debit balance amounting to $940. Now, what is happening on August 9? Sold goods on credit to Petra amounting to $675. So what will be the double entry? Sales credit, it's an income, and Petra's account will be debited with $675 on August 9 credit sales, right? Then next, what is happening on August 14? Petra is returning some damaged goods to Dave amounting to $120. So what will be the double entry? Your returns inwards account will be debited, as it will be an increase in inventory in Dave's business, and Petra's account will now be credited to show that she won't be paying for these goods because these are now returned. So on August 14, returns inwards, right? Then on 23rd August, he is banking some cash sales, so this has nothing to do with Petra. And on August 29, Petra is settling her outstanding balance at 1st of August. What was the balance? It was 940, but she is not paying the full amount, rather she is getting a discount of 5%. So how much is she paying? 940 was the full value, but she is not paying full 940, she is paying rather 95% of this value. This means that she is paying only $893 she is paying. And what is she not paying? She is not paying the remaining $47. So what will be the double entry of this transaction? The double entry would be, let's make that as well. How much is Dave receiving in his bank account? He is receiving $893. So bank account will be debited with 893, and he is not receiving the remaining $47. So what is that? This is a cash discount, and we know that what type of discount will this be? This will be a discount allowed, because he is allowing discount to his customer Petra. So this is an expense for Dave, and we know that all the expenses are debited whenever they are incurred. So discount allowed will also be debited. And what account will be credited? We will be crediting Petra's account with the full value 940 to show that she doesn't owe anything with regard to this amount, because she has paid $893 and we allowed her discount of $47. So Petra will be credited with the full value. So let's write that down. So in Petra's account, we will be showing these two items separately, that she settled her account by $893 paying through bank on 29th of August, and she also got a discount on the same date, namely discount allowed. Discount allowed is a cash discount. We show this discount in the accounts, right? Unlike trade discounts, that is not shown anywhere, only in the invoice it is shown. So 47 she is not paying, she is paying only $893. So that's it. We are done with all the transactions related to Petra. Now we just have to balance this account. So on August 31st, we will extract the balance carried down, and that would be, the debit side will total 1615, and this means that your credit side should also total the same value, but there is a balance on this side amounting to 1615 less 120, 893 and 47, and that would be 555. So this means that Petra still owes Dave 555 at the end of August, on August 31st. So we have done what? We have prepared Petra's account in Dave's sales ledger. We have balanced the account as well. We just now have to bring down the balance on 1st of September. So please don't forget to do that as well. Same year 2020, and the next month would be September 1st, balance brought down 555. Right, so there you have your 6 marks. Now let's move to part C. Part C is a very sweet part. It says that identify the section of Dave's statement of financial position at 31st of August 2020 in which the balance on Petra's account would appear. So we have how many sections in SOFP, in statement of financial position? We have assets, we have liabilities, and we have the capital section, which shows that by how much has our capital increased due to profits and how much have we reduced it through drawings, and if there was some additional capital investment in the business, etc., etc. Right? So in which section would Petra's account balance appear in Dave's SOFP? Petra, we know that she is our customer. Customers are accounts receivables, right? So this is receivable. We will be receiving 555 from Petra in future. She still owes us 555. So this is what? An asset or a liability for Dave? It's an asset, right? She's an asset for the business and a current asset, right? Not a non-current asset, because non-current assets have a long life. They are usually the machineries and the plant and equipment, computers, etc. So accounts receivable fall In which category? In current assets. So in which section would her balance be shown? You will write current assets, right? Don't write that she is a receivable. Of course she is a receivable, but in which section will her balance be shown? In current assets, and then you'll have your 1 mark. Right, now we are left with the last two parts. It says that Dave allows his credit customers a cash discount of 5%. Very good, right? As we saw over here that she also paid us 95% of the value that she owed. For prompt payment, he is giving 5% discount. However, he is now considering reducing this to 2%. So from 5% he now wants to reduce it to 2%. Now what is the examiner asking from you? The examiner is saying state one advantage and one disadvantage to Dave of this proposal, that what will be the benefit and what will be the drawback if he implements this proposal, that reducing the balance from reducing the discount percentage from 5% to 2%. Let's brainstorm first, and then I'll show you that how you can write this answer. One advantage would be that since he now will be allowing less discount, right? Before it was 5% and now it has been reduced to 2%. So this means what? His discount allowed expense will reduce, right? Before he was not getting 5%, now he won't be getting only 2%. So that would increase by 3%, right? So discount allowed expense will reduce. This means that your profit will increase. More customers will be paying you more amount. Of course, the more amount you will be receiving from the customers that owed you. However, but what would be the disadvantage of this proposal? Suppose that before you were getting 5% discount, but now you'll only be getting 2%. So wouldn't that put you off? Won't you mind that you are now getting less discount? You have to pay more now. So therefore, some customers might not like this idea. They might even decide to switch to other competitors, switch to other businesses selling the same stuff, selling the same furniture as Dave, if they are giving more discount, or if they are giving the same discount percentage as Dave, that was 5%. So this might put off some customers. This means that the sales might reduce in future because some customers might want to switch to other competitors. So for just 2 marks, you can write all these points, right? So let's see how we can draft this answer. Right, so we can say that reducing discounts to 2% will reduce the discount expense, right? As we discussed, what expense will reduce? The discount allowed expense will reduce, and therefore it will increase the profit and the cash flow of the business, as more cash will now come to the business as unlike before. Right, however, so this is an advantage, right? This is an advantage for 1 mark. And what would be the drawback? However, it might disappoint some customers, due to which they may decide not to buy from Dave in future. So this is a drawback of implementing this proposal, that you might lose some customers, you might lose some sales. Moreover, you can also write that, if you don't want to write this point, you can also write that some customers might take longer to pay the amount that they still owe, because previously they were getting more incentive and that was a 5% more discount percentage, but now since it has been reduced, so they might not even consider that discount too much, right? They might want to pay the full value and delaying the payments, because 2% might not matter to them at all. Right, so it's totally up to you, but make sure that you put across your point clearly and for the marks given to you, right? So for 2 marks, 1 advantage and 1 disadvantage. Now let's move to the last part, which says that Dave is considering turning his business into a limited company. Wow. Now the requirement is, advise Dave whether or not, right, whether he should do this or not, whether he should form a limited company. You have to justify your answer with 2 advantages and 2 disadvantages of forming a limited company, right? So 2 advantages of limited company if he forms a limited company, and 2 disadvantages of forming a limited company. So 2 marks for advantages, 2 marks for disadvantages, and 1 mark for justifying, that is, what do you recommend? So this part is of 5 marks. So let's first discuss this part as well. We know that the most important benefit that a person receives if he converts his business or her business into a limited company is that the liability becomes limited. He only loses the amount of his investment into the company and he is not liable for all the debts of the business. No. Unlike sole trader, if the sole trader business fails or if he wants to pay off his suppliers, his lenders, he might even have to put his own assets at stake to do that. Right. So, in a limited company, we know that there is a separate legal identity concept. Right. The owner is separate from the company. So, yeah, because of that, you enjoy such benefits. However, what could be the disadvantage if he forms a company? Right now, he is operating as a sole trader. Right, a sole trader business is a very private business. You don't disclose your personal information or your accounts to anybody. Right, you can only show it to the government for tax purposes, but not to anyone else. However, in a company, we know that the accounts are published. Right, a limited company's accounts are published and they are available to the relevant stakeholders. Anybody can see them, even your competitors as well sometimes. And so, yeah, everyone knows what is going on in your business. Right, so they have some regulations. The companies have to go through the regulations. There are sometimes even requirements that the companies perform the audit every year. Right, that is the checking of the accounts, that whether you are doing the accounting correctly or not. However, these all regulations, these all expenses are not there in a sole trader business. Right, so you can write these points. One more point which you can also write in a disadvantage is that right now he is the sole owner of his business, but if he converts this business into a limited liability company, this means that he will now become the owner. Right, that means the shareholder, and we know that the shareholders do not manage the day-to-day affairs of the company. The managers do that for the shareholders. Right, so there can be disputes between the managers and the shareholders. Right, there can be a conflict of interest as well. Some decisions Dave might want them to implement and they do not want to implement, so there can be a conflict of interest, disputes, disagreements, etc. Right, and in the end, please don't forget to recommend as well that what do you think he should do. Right, and it's totally up to you whether you want to go with which side. Right, yes, form a company, or no, do not form a company. So now let's understand that how we can write these points in the answer space given to us. Okay, so how we can explain this? We can say that if Dave forms a limited company, then he will enjoy the benefit of limited liability. Right, this is the first benefit. Right, first benefit, 1 mark. That is, he won't be responsible. Now you are explaining that point. He won't be responsible for the debts of the company, as he'll have a separate legal identity from his business, unlike a sole proprietor business. Right, so this is the second benefit for another 1 mark. Separate legal identity and limited liability. Now, the drawbacks. However, Dave would have to let go of his business privacy, as the financial statements of a limited company can be viewed by the public or the relevant stakeholders. Yes, because they are available to anyone. These are published. Now, first drawback. This is because companies are subject to regulations than a sole trader business. Now, you're explaining this point. And not only that, this is not enough. The second disadvantage, there are chances of dispute between Dave, because he will now be the shareholder or the owner, and the management, the ones handling your business. Management of the company regarding strategies and planning. So there can be disputes, there can be disagreements, and therefore, okay, so now this was what? This was the second drawback of forming a limited company. So you will have now your 4 marks, and then in the end you can recommend whatever you want to recommend. I have recommended that. Therefore, based upon this discussion, I would suggest that Dave keep the control in his hands and keep operating his business, this business, as a sole trader. So this is for my last 1 mark. This is a bit long because I wanted to explain it in as much detail as possible. You should try to fit your answer in the answer space in the lines given to you, right? And it is totally up to you, whatever you want to recommend. and whichever size points you have more, you can recommend that side as well. If you have more points to him forming a company, so yes, you can recommend that. And if you have more points that you do that are drawbacks of forming a company, so you can recommend that. So we are done with the first question of this exam, right? And I'll be solving the next question in the next video. So see you in the next one.